FP&A analysis at sort of 3 or 4 different junctures influenced the decision. And that is essentially how we conducted the turnaround, actually, at Luno. So at the back end of 2022, we had a great amount of disruption in the crypto market. We'd had FTX, we'd had Freehouse Capital before. Markets were very quiet. It was a very depressed market environment. And that obviously had an impact on our financials, right? We are very dependent on consumer sentiment, and all things crypto seem to be going all ways south.
Hello and welcome. Real quick update today for you. Before we start the episode, I have got something special for all my FP&A professionals out there. If you have ever wondered whether your current FP&A practices and your FP&A department is truly best in class, or you are looking to find out where you are actually falling short, I have created a free FP&A assessment just for you based on my 20 years of experience. It is a quick but powerful diagnostic tool which helps you assess your data, processes, people, and technology, and provides a quick snapshot on your strengths, uncovers your hidden gaps, and gives you a clear roadmap on becoming a more strategic, data-driven finance leader. It takes less than 5 minutes to assess where you stand. The link is in the description below. Thank you. Hello and welcome to FP&A Unboxed Podcast, dive in real stories, challenges and wins for finance leaders. I am Tejas Parikh, the founder at Akshar Business Consulting and your host today on this FP&A Unboxed Podcast. Today we'll be talking about basically how FP&A works for a financial services business. And we'll be talking for the first time to 2 podcast hosts guests together. We've got Alwyn Jones, who is the CFO at Luno.com, first time mother and a commercial finance director at Luno. Thank you both of you for being here. Do you want to say a quick few words first? Shall we go ladies first? Megan first, please.
Yeah, it's great to be here. First podcast I've ever done, so interesting to be getting involved. Yeah, I've been at Luno for 3 years almost now. So it's been an exciting adventure, but as you mentioned, soon to be off on maternity leave for a slightly different, exciting adventure for a little while.
As we discussed, right, off air, 15 years of high blood pressure coming your way.
Sounds that way from my mother's history. It sounds like that's going to be mine as well.
Yeah, so Megan's going to be transferring the blood pressure to me. So I'm not sure we signed up for this after 3 years, Megan, but there we go. No going back now, I guess it. So I'm Alwyn, I'm CFO at Luno. I've been at the company also about 3.5 years, and looking forward to getting into the discussion. So take it away.
We've got a few questions which we would like to go through. And first one is for Megan, right? Because that is getting your thoughts. How do you collaborate with FP&A? Because you work as a commercial finance director. So you have to collaborate with your FP&A function. So how do you collaborate with FP&A function and adjust quickly as the market shifts, right? Because in your world, the crypto swings, the new products are launched, things are moving like, Trump got up in the morning and changed his mind on something and the markets have gone all over the place. So, any thoughts on how do you coordinate between different functions, your commercial finance priorities versus FP&A ways of working? How do you coordinate with that one?
So I think one of the biggest things for me when I was thinking about this question was when I was hired, Alwyn specifically said he wanted someone who can zoom out and almost steady the ship. Because as you say, with crypto, the updates can come constantly. It's 24 hours a day and it can swing, and 1 minute it's up, the next minute it's down. And it's very easy to react emotionally, particularly in terms of things like revenue projections. So if you're putting together a forecast, you respond emotionally to whatever's happened the previous day, you're going to be over optimistic or over pessimistic in the response that you're giving. But it's zooming out and looking for that big picture. I think that's super important. So a large part of what I do in those instances is guide the team on where that middle ground is, because those fluctuations are expected. We don't know when they're going to happen, but they're going to happen at some point. In terms of actual response to operationally to those shifts, obviously one of the first things is marketing spend, because if it's a good market, people are buying, people are selling, we want to make the most of it. So having flexibility again on the timing of things like marketing spend is super important. So getting those teams talking to each other so that we stay within budget, but that we're making the most of it is important. And then I think a lot of the rest of it is how are we trying to think 2 steps ahead of what might be coming in terms of product launches externally in the markets, but also if things do change, how do we flex the prioritization of what our staff are working on? Because we have, teams of engineers and various other roles that are there to help us develop things. Sometimes when we launch things, they're more successful or less successful than expected, and we can reiterate and we can flex. But it's constantly looking at that prioritization and how we can change things.
Yeah, no, but that's important, right? For you to be able to coordinate and, as you said, marketing budget, your product development, as well as FP&A, and removing the emotion from the forecast and actually being more pragmatic and practical is critical. As a finance leader today. Any thoughts, Alwyn?
Yeah, I mean, the big challenge in this industry is really distinguishing the signal from the noise. So I came from banking, and banking is relatively straightforward in comparison, right? Although we never thought it was the case. But a bank, you roll forward the balance sheet and you've pretty much got 95% of your P&L. Crypto, it's almost like look out the window, look on Truth Social, figure out what's trending that day, and then try and figure out, is that going to be a sustained trend or not? And I think the critical bit for us is all the same tools apply, right? It's scenario planning, it's understanding the key drivers of your business, but actually it's, do you have real uptime data and what is the narrative that sits behind it? So when Megan talks about the zooming out point, a lot of the time it's understanding the story, discerning that signal and saying, okay, what do we need to do to respond as a business? And that's the tricky bit. That's the bit that, we try and get right. We get it right a bit more often than not, and that's a good result. But it's really a combination of art and science as well. So you've got to have the data, but that instinct for the industry is also quite important.
That is critical. That's what you just said. It's art and science both. I mean, I think a lot of people either miss the art. I think actually a lot of finance people miss the art of it. They get too scientific about it, but it's not just a science. It is an art as well.
Analysis gets you so far, right? And then you need to apply judgment to it, right? So there are people who will come and put a model and go, I'm expecting 92 cents, of revenue on that. You're like, no, you're not. You're expecting rounded to the nearest 1,000, and you're going to be plus or minus $5,000 on this thing, right? The model is furiously accurate at that point. And that's another example. It's very, very obvious, but it's amazing how many people don't think that way. So the analysis only carries you so far, and the real skill is then figuring out what's it actually tell you and what are you going to do differently in the business as a result.
That's a shot which is definitely coming up. Analysis only gets you so far. Then you have to take a gut feeling around it. That's a shot which is definitely coming out of this one. So Luno, again, is scaled across 40 countries. You've got 15 million users, right? I mean, I'm sure the number has changed already by the time I'm saying this out loud. So, FP&A challenges come with forecasting in such a fast evolving environment and high growth. We already touched upon this a little bit. So more from an Alwyn perspective, right? When you're talking to your board and you're talking to managing expectations from, other leadership, because or your other C-suite and things like that. How are you managing that, Alwyn, from a CFO chair perspective? Because you can never say that I know exactly what is going to happen tomorrow. I mean, that's a very unnerving position, isn't it?
Yeah, so I'd love to be in a position of, right, I have high certainty of inputs to my model. I stick those into a nice enterprise planning software or spreadsheet, probably more typically, and I can say with high degree of accuracy that I'm 95% certain here's my revenue next month. No, it's not going to happen. So how do you deal with that? So the same tools do apply, right? So it's scenario analysis and thinking through range of probabilities, but being very clear with the board on, okay, here are the different ways we can think about how the rest of the year and next year might play out. Typically for us, the rest of the year, right? Next year is really a mystery in crypto. And here's the range of possibilities. And across that sort of fan diagram of where the possibilities are we happy with where the business will come out? So you might plan to have a okay year in a relatively quiet market with low volatility and low retail interest. And then that turns into a very, very good year when you get market activity, or Trump wakes up and decides crypto is amazing, and that lasts for some period of time. But you're constantly then balancing the downside and the upside to cases in how you're talking about it. And again, it's a reasonable set of priorities, right? So we can all draw a scenario where everything goes to zero and the business is really in a more difficult sort of status. But it's how do you think through what's the range of likely outcomes? And that is a discussion with the board. It is not here's our stated view. Right, we take that, see you next quarter. It has to be an ongoing conversation because the nature of the business we're in means by the time the next board comes around, things may have shifted dramatically already. So we're constantly in that conversation.
Sure. So again, if I was to rephrase what you said, right, you are a business where you guys essentially live and breathe scenario planning because you are constantly in an industry which evolves, and every month you go to the board with saying that this is what it looks like at this minute. Will it change next month? I don't know. We'll figure it out. But I'm guessing your board also responds to that better because they know the industry they're invested in. So they expect that, yeah, okay, it's going to be a bit chaotic, but as long as we win more than we lose, we should be fine.
Yeah, I think another important point that's quite unique to our situation is because we're owned by a company that has lots of investments across the industry. So they have a great view across the entire ecosystem. They can actually help us because they collate what they're hearing across all of their companies and their investments. And that helps provide a broader view of where do we think things are going. It's very interesting to look at, say, our sister company who's a miner, looking at hash rate, looking at what they're seeing in terms of like raw Bitcoin coming into the market. We can use that as an influencer for consumer demand and help predict when the next halving is, and that has an impact on supply and demand economics. So there's a good sort of feedback loop between the various entities.
That sounds really, really interesting, right? Because finance people tend to always think that they are the drivers of the forecast, whereas what you just said is your board also helps you get inputs, which helps you in your forecasting, which is quite critical, right? Megan, how do you guys coordinate, right? This level of craziness, inputs from the board, inputs from the market, social, truth, whatever, social truth or whatever that is, the Trump version of Twitter. So how do you manage with all of that?
I always joke about our revenue forecasting. Every time I do one, Trump opens his mouth and it changes everything. It's usually the next day. So I still haven't quite worked out how to deal with the Trump factor as I talk about it. But yeah, you're right. There's a lot of different views, a lot of different influences. And for me, it's a lot about getting that balanced view in the middle as your starting point. Because as we say, there's a lot of scenarios that you're going to need to run, but trying to get that one solid version which takes the majority of views into account or inputs into account first. I think that's the most important thing. The other piece for me really is you need to have sort of your guiding principles. So a lot of the time, if it's something we've done before, then we look at what we've done before and what we think will be different this time. If it's not something we've done before, it's a lot harder, obviously, to have that sort of strong principle to start with. But then you've got the flex around the edge. So let's say you're doing 4 or 5 things that are potentially risky, you're not going to put all 4 or 5 things fully into a plan. You're going to make some kind of educated guess about how many of them are going to go well. And that's your starting point. Maybe half of them do well, half not so well. And then you'll have versions where they all do well and they all go badly, etc., and everything in between. So it is a lot of it is balance, I think, just trying to get that middle ground to start with.
Yeah, no, I think I like that what you just said, right? As a typical FP&A person, you will balance out your forecast and then put the rest in your risk and opportunities to see that, okay, I'll bake this in if it goes well. If it doesn't, then it's my back pocket. I'm going to keep it in my back pocket. And again, that's the art, isn't it? Okay, anybody can plug in a number and tell you what the output is. But the art is what numbers to plug in and what numbers to leave out.
Exactly.
That's the art, right? Perfect. So can you share a real life moment where commercial insights have shaped our FP&A forecast or led to change in the strategy that Alwyn already was supporting, Megan, for you, like where you've given an insight and that has led to a change in direction for FP&A forecast or for Alwyn's strategy?
Absolutely. I think one of the more recent examples was late last year as we were sort of looking ahead to 2025. We were working on some customer unit economics so that we had a real feel for our most profitable customers and how they differ from our least profitable customers. So learning, about what products they engage with, things like that. And one of the insights that came out of this work was that our most profitable customers buy or sell 5+ coins, where some of our least profitable customers, it may well be less than that. And this was at a time where we had already launched a strategy around expanding our asset selection. But there were a lot of doubts as to whether or not it was the right direction to be adding more and more coins, or whether it was perhaps something we should pull back on. So it gave confidence at that point in time that we were absolutely going along the right lines, and we should continue to make sure we had that selection of coins available. Subsequent to that, again, analysis on how profitable the different coins are, particularly as you're adding more, you start to see then the diminished return. And that's the point where you then say, okay, how many is enough? And assets isn't just coins. So, what else is there that we can offer? And which coins do we want to focus on? So we're not going to go from loads of added coins to zero. But, are there specific coins or types of coins that we're seeing good performance with, where we go, that's the kind of coin we need? So, for example, making sure we've always got the top 20 coins by market cap available that we can quite easily do. And it's very strategic in terms of which ones we're adding, without just adding plenty and just keep going. Once I think we'd got to a certain threshold, it was then the trigger to review that. So it was a data-driven decision, certainly to begin with, and some of those subsequent decisions thereafter, that came from various people having theories, but we needed to back those hypotheses with something a bit more solid to get CFO on board, and then also ultimately the board as well.
Again, I'm guessing there's laws of diminishing returns. That's the more coins you add, the increased amount of revenue or profit you can gain from those coins starts to diminish. So there is a balance to be had at some point in time where you'll be like, okay, I need only these many coins anymore, and I'm not going to really get much more out of it.
Absolutely. But there's also other factors. So will certain customers come to us if we don't have a certain number of coins, because they wouldn't even look at us in the first place? So there's an element of you potentially need a certain amount available to get customers interested anyway. Hence, some of the stuff that about the most profitable customers are engaging with those coins is quite important, because if you just look at a revenue number in isolation with no context, you don't see that full picture. You need to look at the layers and then try and make the judgment around what the right call is.
Any thoughts on that one?
It's a really good piece of work, but it's very detailed. So we talk about unit economics, we're looking at both revenue and costs associated with a direct customer. So it's a very data intensive exercise, right? And you run into lots of definitional issues, how do you allocate costs, everything else, and they have real impact on the output. So there was a lot of work across the whole business in terms of data science and engineering support, but also in product in terms of making sure that we were thinking about those things. It led not so much to a revolution in strategy, but an evolution of strategy, right? So our brand positioning had been very much around trust, carefully curated coins. We may not list, the latest meme coins, thousands of coins, but you can trust the protocols that are on Luno. So you don't want to diminish that or mess with that brand identity. But what became clear was what people expected from a trusted crypto exchange had moved on, right, from when the company was founded. And so pitching at that right level was hugely important. But then understanding, okay, so what are the triggers that lead customers to transact on multiple coins? And that gave birth to the idea in terms of the product of themes and which coins do we want to list. AI is big at the moment, as you might expect, right? We're probably not allowed to say it too often, but so that is a clear theme. Gaming is another, which Megan will know from her previous background. But that combination actually starts having an impact on future product development as well. Good example of how an in-depth, really long-term piece of analysis that took several weeks to do suddenly gives you a real insight into how the business is working, and gives you a real metric by which to measure how a lot of your initiatives are actually working.
Sure. So, but then again, a question, I guess, much more to Megan. Megan, if it is so much of work, as Alwyn explained, that it was a lot of in-depth, exhaustive work that you guys put together, Have you got now a mechanism which you guys have put in place to now support that on an ongoing basis? Or was that a one-off activity? The board asked for it, we did it. Now the spreadsheet is now somewhere in the corner, archived and forgotten, essentially.
No, absolutely. It's ongoing because I think every now and then there are exercises that come up where the board will ask for something, you do it as a once off and it gets dropped. But something like customer unit economics, there's a real value in it, particularly if you can use the data well. And I think because of that value, it's something that was worthwhile spending the time, because a lot of it is upfront investment. You've got to build the data structures in the background to allow you to get those inputs. Once they're built, you get the outputs quite regularly that then you can reanalyze, you can run scenarios. We can work with our data team to kind of deep dive into some of these things. So it becomes much more of an ongoing conversation where whenever a team's looking at something and they're trying to validate whether or not a certain action might be the right course, it's a case of we'll bring it back to the customer unit economics and say, okay, let's look into this. And I think we're now at that point where we have that data. It's now using it to its fullest extent, whereas that first exercise was much more around, well, let's get some initial insights because we just haven't looked at things in that way before.
Yeah, no, I think this is fantastic, right? I mean, you've now got a structure in place. And as you very correctly said, the first time is very hard to identify the right sources, identify the quality of the data and everything else. But once you do it on a more regular basis, it becomes easier as it goes along, essentially. It's the initial investment of hard work that you need to put in. More for Alwyn on this one. Alwyn, what is the moment when FP&A-led forecast or narrative convinced the investors or the board to back a very bold initiative?
So I think there's the immediate sort of story that comes to mind that actually FP&A analysis at sort of 3 or 4 different junctures influenced the decision. And that is essentially how we conducted the turnaround actually at Luno. So at the back end of 2022, we had a great amount of disruption in the crypto market. We'd had FTX, we'd had Freelance Capital before. Markets were very quiet, right? It was a very depressed market environment, and that obviously had an impact on our financials, right? We are very dependent on consumer sentiment, and all things crypto seem to be going all ways south. So it was a very, very challenging period. And we'd grown quite dramatically as a business. So we really had to buckle up for a couple of different challenges. So firstly was, how do you analyze the business and get to the right size number of people? And that was a in-depth piece of work, really redesigning the organization financially from the ground up and looking at a lot of industry benchmarking, thinking through our efficiency structures. Okay, what size should your finance team be if you're a 600 person versus a 1,000 person organization? But getting to the point that the exec and the board had confidence that we were cutting to the right level and not too far or not too little. First issue. The second was then, how do you then build back the revenue element of that equation, right? So a turnaround is not done in isolation. You can't cut your way to success. It's done with both levers, and that means that you have to build your revenue journey. And again, ruthless FP&A focus on what is going to move the dial from a recurring monthly revenue basis that is independent of market, that helps us build the path to profitability. And where do we need to make additional investment, which is the third part of the analysis. And the combination of those three together, firstly, convinced the board that we were in control of the situation, right? And that's a really important place for you to be with your board, that they trust the analysis that's coming out and that you are making good database decisions that are not hampering future stability of the organization. But it also gave us a roadmap to check mark against, and we used that for the entire year to report our progress. And we did very well on some initiatives and badly on others, to be honest, and we subbed in as we went. But we constantly had this guiding picture of, we've done the sort of hard work in terms of cost reduction, but bear with us as we build out the revenue picture. And eventually we ended up taking the business to profitability again as a result, but long, hard yards supported by FP analysis. And that analysis was vital to making sure, not that our board would panic, our board are more mature than that, but they could see a path to the other side of the crisis. And that was hugely important.
I think you're absolutely right. I mean, even my experience has been always the fact that even if you had a bad year or a bad quarter, as long as you can qualify why it is and what are you doing about it and how do you get to the other side, right? Then most boards are generally pragmatic and understanding. As long as you don't do that every every year, you're fine, essentially. Alvin just talked a lot about how FP&A supported you guys during 2022 and your turning around the business and your path to profitability and revenue generation again and things like that. Uh, so that's how he went on a strategic angle on it. But Megan, from your perspective, how did you guys on the ground, right, make that happen? Because when you're doing that analysis and we're putting the plans together, I'm assuming you went through some amount of pressure when you're restructuring the entire business. So tell us your experience around that one.
So it's one of the things that makes me laugh about. I mean, just obviously not a laughing situation, but in terms of when I look for the spreadsheet that we used for one of the versions, I saved it as version 42. Now, it wasn't version 42, but I hadn't saved version numbers. I just picked the random number one day, and it's incredibly helpful because it's something easy to search for to find the file when I need it at a later date. But it gives you a bit of an idea of, it felt like version 42 or possibly even 142 at that point, because when you're doing things like this, there's a lot of iteration that's needed to get to a point where you're comfortable that, again, it's that art versus science piece, because there's so many unknowns, but there are also things you can validate. So you can, if you're looking at the size of a company, you can validate the percentage of finance to other staff ratio, for example, or head office to the guys who are actually on the ground building product. There's plenty of data available to help support, but it is taking the time as well to think about whether these things make sense. And then you talked a little bit about sort of the kind of staying strong when you have a bad quarter or you have a bad year. And there is an element of, again, knowing when to stay strong and stick to your guns and say, no, look, we know this is coming. We may get the dates wrong, but we know this is where this is going to go. So the example I always think of with that was, try and predict the Bitcoin price. I mean, you're never going to get it right, ever. If I could do that, I wouldn't be necessarily sat in this chair in this role. I'd probably be a very rich woman by now. But there was an exercise we did where we looked back at the last couple of cycles and we looked at this cycle and we normalized to get a comparative to see, well, if it was following the pattern, what would it look like and when would it spike into a bull run, etc., that sort of thing. A lot of people were telling me that no, it's changed. There was lots of information out in the media around how the Bitcoin cycles are over now, everything's completely different. And my gut was telling me that wasn't the case, because when I was looking at the charts, they were lining up almost perfectly. When you zoomed out, if you look day by day, absolutely not, but that bigger picture piece. And I remember it really clearly when October hit and I was expecting the price to go up, was the moment that I started to lose faith. And then November, that's when the price shot up. I was like, there it is. It happened. It was just a month late. And that was all, I think, to do with Trump and the inauguration and all of that side of things. Obviously, the vote happened in November. So some of it is staying true, but it's also being ready to adapt and change, because you can stay true for too long and then miss out on the opportunities or just be flogging a dead horse, quite frankly. So getting that right feeling of when to hold strong and say, no, it's fine, have faith, this is the right thing we're doing, it's just taking longer than expected, versus we put a plan together, we thought that was the right thing, and now we're looking at it, we don't think that is actually the path, so let's change that path. And I think from an FP&A point of view, obviously you seek the guidance of people around you and way they think things are going to go, and you try to project that. But there are also elements of, you can sometimes see it from a perspective they don't see, because you're looking at it through the numbers as well, which is not always the same view that everybody else has. So being willing to speak up and say, I just don't think that is the right thing, and present why. And then obviously it's then up to individuals of a higher pay grade to make the final decisions on what we want to do. But you're giving a perspective that they may not see.
No, definitely. I think that is very, very true what you just said, right? About stability versus adaptability and how to take the right pick. Again, it comes back to the art and the science, right? The art of being adaptable when you need to move the needle, essentially.
I think Megan's also underselling herself a little bit there, in the sense of, I think a major part of it was that external perspective on numbers and where initiatives actually delivering what we thought they were going to deliver was vital. And then the number of times that I heard senior product people say, and Megan signed off these numbers in all of their exec presentations because they wanted that imprint of, this is actually having the effect that we expected. We were providing a authoritative FP&A stamp on, yes, you are actually delivering, or no, this is where it's not going well. And that was very, very important to the exec and by consequence the board.
That's a very important point you make, Alwyn, where you said, that they got Megan to sign off before they went to the board with the number, saying Megan has signed this off and therefore I'm telling you this number is the right number. I mean, that speaks volumes to the credibility that the commercial finance and FP&A team have built with the business, right? If we say it out within finance, we laugh over it. But the reality is I speak to a lot of finance people and they don't, it's a struggle. It takes, I always encourage people to say that, guys, you need to earn that credibility. That credibility is not given to you because you are a chartered. That credibility is given to you because you proved time and over again that when you say the number is right, means it is damn bloody well right. Take it to the bank and it is right. Right? I mean, that's the kind of conversation which a finance person needs to have. Otherwise, it's a tricky one to survive. I'd say, what are you doing in finance if you can't back up your number?
Yeah. Exactly.
You're developing a commercial finance team, you work with FP&A teams. So what basically do you think is the key attributes that you are looking for when you're bridging within commercial finance versus financial rigor? So again, we were just talking about, making sure your number is correct. So that sounds almost much more like an accounting compliance kind of a thought mindset. Whereas obviously, again, as you started this conversation, you said commercial finance, you zoom out, you look at the larger picture and things like that. So what are the key attributes you're looking at in FP&A professionals when you're looking to expand your team or when, you pick up winners in your team, essentially?
I think that the two main ones for me is balance and curiosity. So balance is something that's come up quite a lot through today's talk so far, in terms of, I'm not looking for someone who wants to always find the right answer, because, like you say, there are other parts of finance where that individual will thrive. But if you do that in FP&A, you will spend too long looking at numbers and probably still not get it right anyway. So there's an element of judgment around good enough that not everyone is okay with and not everyone is able to do. But it is important in FP&A, and it is, as you say, that zooming out versus detail, because detail still matters. And there are times when the number does need to be right or validated or whatever it may be. If you're putting a number in front of a board, you need to make sure that the number you're putting in front of the board is the number from the spreadsheet or from the calculation or whatever it may be, that you're not contradicting yourself. So those things matter. Detail matters. You just can't spend all your time on it. So that balance, the balance of science and art, as we said before, getting that right mix is really important. But I think curiosity for me is the other word that doesn't get talked about enough, I don't think. And it was certainly something when we expanded the FP&A team earlier this year that we were looking for. Because what I found is individuals who are naturally very curious, very interested in the business or in business in general will ask questions, and they will find opportunities, they'll find insights, they'll find out information. It's just part of who they are and the way they operate. And that's essential for FP&A because, as you say, yes, the numbers matter and we are part of a finance team, but there's so much more to FP&A than the numbers. And that ability to use that curiosity is something that I think is vital in FP&A teams.
I have to say you are absolutely right. Not just in this podcast, in a lot of our previous podcast guests as well. Consistently, the theme of curious has come out in that conversation. People are like, If you're not curious, you cannot be in FP&A, basically. Because you want to find new ways of working, you want to learn more about the business, do more stuff. So yes, balance is important, but also constantly being curious to push yourself and the business ahead is critical to be in FP&A. Any thoughts on that one, Alwyn?
Yeah, it's curiosity was the word I had in mind. But if I can expand on that a little bit, I think it's really important to remember that FP&A is fundamentally your business partners. And that means you have to be interested in the business and think like a business person first and foremost, right? So this is this product. Whose customers are going to buy it? How much are they going to buy? Are they going to come back again? Why is that? Why do we think that's going to? What other opportunities does this link up? Have you thought about the impact on this cost base, that cost base? What does customer success think about this? What does anti-money laundering, fin crime team think about this? Right? Have we incorporated all the sort of angles? And then what do I think about this? Do I think this is a good idea? And applying judgment. And there's a huge commercial aspect there, right? That you need to be on it. But the partnering bit is also really important. So there's a huge people element, right? So if you're sitting there going, oh, I've got these analytical tools, I'm going to go have a meeting with Alwyn, get a lot of inputs, stick that in my spreadsheet, go away for a week, come back with my analysis, produce my little deck, and everyone's going to be very happy with me, you're going to get nowhere, right? Because what execs are actually looking for is, can this person help me make a decision? And so the people who embed themselves more with the team, build those relationships, can then bring the finance toolkit to bear. But that is very much secondary to being a business person who is partnering with an exec or a senior team lead to try and do difficult decisions and make them in the right way that's grounded in a way that can be justified to the board. That curiosity, people skills, everything else, it's not sort of I go away and do my analysis in a local ivory tower. You're on the front line. You are properly in the trenches with execs, and that doesn't suit everybody. So the number of people I've seen who've tried to make the transition from, say, a reporting control role to an FP&A role, the number one reason they fail is they don't understand this transition, that they are business people and partners with the business first and foremost, and finance people second. And that mindset shift, I think you can teach it, but it's the number one predictor of success when I see people making that transition.
I have seen at least a couple of people miserably fail in FP&A on that one, where they get so lost in the weed of reconciling, and you're like, let it go. It's 24,000 in a 750 million P&L, and it's a forecast. It's going to change tomorrow morning as compared to tonight. Go to sleep. It's not going to change the world. You're more or less there, 80-20 Pareto principle. You're not completely talking nonsense. You're fine. Move on. But they can't. They just keep going on and on and on, burn themselves out and burn the business out. And both don't know. Because even though you can't burn the business out, you can't keep asking people these questions, because they're like, get over it. We don't know. Get on. Go on with it, right?
And the people you're partnering with have their own little idiosyncratic quirks and everything else, right? Megan and I have a particular colleague that we deal with where I say his specialty is to say, this number is wrong. The rest of it must therefore also be wrong. And you just need to roll with the punches, because once you know that that's how this person interprets data, right? It's a perfectly valid way to think about it, right? Because numbers should not be wrong. But you then need to figure out how you get them over the hump and get to the decisions that you need to make, because the whole thing then can't go into a hole for 2 weeks whilst you reconcile the set of data to get past that first objection. So it's really, really key, and a good example of how it's the people skills that matter in this particular case.
Yeah, but I tell you one thing I have to share with you, this, Alwyn and Megan. Every business has that one person who says this number is wrong. I have worked in far too many businesses and too many even clients. I've always consistently found in every client and every business, there is this one person who says, no, but this number is wrong. How do you say? No, I know it is wrong. Did you make it up at home? No, I know this number is wrong. Keep arguing with you without any backup or anything. And you're like, what the hell, man? But yeah, as you say, right, roll with the punches and get on with your life, because otherwise you're just going to struggle with it. So that makes complete sense. Alwyn, what emerging FP&A tools or technologies do you think are fostering agility and data-driven decision making from a CFO chair that you are sitting in, right? And you've been in some really interesting businesses prior to Luno as well. So I have to ask you this question a lot more of what tool set. A lot of things have changed over the last 30 years in FP&A.
Yeah, a lot of things have changed. A lot of things haven't changed. The surprising degree to which these amazing edifices rest on Excel spreadsheets and ad hoc analysis is particularly telling, right? And how quickly you move out of your enterprise resource planning system straight back into Excel or a Google Sheet, and that's exactly what's going to drive the analysis, right? We're addicted to it, right? As finance and business people, we're just naturally going to crack open a spreadsheet. So I'm a big fan of enterprise resource planning. We've implemented Anaplan. There's a long way to go, right? So don't get me wrong, we are not using, I think, 1/10 of what the software is capable of yet. And the thing that I'm very excited about is that kind of extended planning and analysis where you can integrate proper business metrics, not just financial metrics, so operational data and real strategic indicators into your financial analysis. I constantly see the commercial magic comes together where you put real operating metrics next to financial results, and people tie the results of their projects back to those. And that requires a unified view of the business. It requires data to be absolutely flowing freely in a way that is well defined and understood, which has implications for how finance then thinks about things and how we project things. We haven't got there yet, but I think when we do, that's fundamental to transforming finance from a reactive, here's where we got to this is where you're going to be. And my 5-star daydream is, marketing invoice comes in, it's attached to a PO, the right people approving the payment see it, but everything else just flows through the system from the general ledger to your planning system, and I walk in and see it in my rolling forecast on a Monday morning and no one's had to touch it. I think we can get there, but we are such a long way off doing it. That's when your finance systems become the nervous system of the organization, and not something that is really perpetually looking in the backward mirror. But that area of real predictive data analytics based on both operational and financial metrics, that's where it's at. And if we can get to that kind of place, I think we'll be in a light years different environment in terms of how accurately we predict going forward and the quality of our decision making.
Yeah, but if I can just add, Alwyn, to your story of the invoice for marketing comes in, I'd also like to then see how that marketing invoice is not only in my forecast, but what was the business case behind it, and has it delivered on the KPIs on the marketing initiatives for which the invoice is being paid
automatically. Yeah. Some analyst doesn't have to go off and think about it.
Exactly. Without opening, exactly as you said, without somebody opening 20 spreadsheets and doing, 5 days of overnight work, then that is where you are in a happy place, because you are like, okay, now I know this is working for us. And it can happen. Today, you've got the tool sets. Like, again, if you got Anaplan is definitely one of the top solutions in the market. So definitely, it is possible with tool sets like that. Again, and one more thought I wanted to get your thoughts on. You mentioned but we are naturally inclined to Excel and to Google Sheets. So we open one up and we will first thing do
it's our power app.
Yeah, exactly. It's our power app, right? But my thought on that is Excel is a good starting point to work on it. Definitely, if you're working with 5 people or 10 people, you're trying to brainstorm an idea, open an Excel book, throw a bunch of ideas on it, see what works, what makes sense, and things like that. As long as you then formalize it through a structure of a EPM or ERP or Anaplan or whatever else that looks like, or Power BI or whatever else that you are using, right? As long as you support that as a process, is not then done in an Excel, but in a structured solution, you are in a good position. If you leave it in Excel and then keep supporting an Excel-based process, I think that's when then FP&A starts running into risk of, long, crazy hours and unsustainable processes and output, which you will always question, because what if somebody has hard-coded a number in there? You don't know, right? It's an Excel book and it's got 40 tabs and it's got thousands of cells and you don't know what the hell has happened in there, right? Any thoughts on that one? First from Alwyn and then Megan, I guess.
I'll let you into a secret. Like, no startup, as far as I can tell, in the history of startups has really prioritized finance as a source of competitive advantage and investment from day one, right? You start a company and it's, can I get paid? Can I get a bank account? Can I get my account sorted? How do I set up some kind of control process? How do I produce the reports I want to do? And all that gets done in Excel. And then you start systemizing, but it never quite goes away, right? So when I joined Monzo, when I joined Luno, I looked at this wonderful app experience that the customer has, right? And I'm expecting that technological experience to extend into the back end. No, right? We reconcile on a spreadsheet, right? And so moving away from that is hard, but once you start down that path, you rapidly see the benefits. Quality goes up, your working day close comes in. I'm still not at instant close, I want to be, but like these are the things that we can see immediately, and it helps you keep your finance team from scaling with the business linearly, and helps you shift work, not necessarily people, but work, from what are the numbers actually to telling you what they mean. And that's where you want the future of your effort to be going. So unfortunately, I don't think anyone's cracked this yet. I'm sure someone in the comments will come back and tell me, but you should look at this company. I think some of it is essentially a tech debt that you end up not paying down. And the question is, are you focusing on the right things to make sure that you are then systemizing the right processes? That's the critical bit.
Megan, are you systemizing the right processes? How do you feel about that one?
I think I'm also, I used to think I was good at cutting technology. I'd like to think that, but I'm not. When I came into Luno, actually, it was quite interesting working with my number two, who is very much all about, we'll use the system. We will make sure that we use the system for everything. And my default was, but I like my sheets. I like the comfort of the flexibility. That's not to say I don't agree. I do think, absolutely, we're in a data-driven world, and there's a lot more data available and that we should be using than there used to be. So we need to find a way to manage it. I agree on the point around it's a useful tool. It has a place, and it is, for me, the design ground. So I always say to my teams, if we're putting a process in place, we should design it using something like Excel or G Sheets, and learn the logic and learn what works, and then recreate that in a system. And the system brings the robustness and that longevity. But I mean, for me, the interesting journey that I went on for that was in my previous role, another company, we didn't have an ANA plan. In fact, all we had was spreadsheets. That's it. And we had so much data that the spreadsheet was just breaking. And I didn't like the fact that the spreadsheets that had been set up before were very much open to error because you could easily override a number. So one of the things that I played around with was having data that flowed in a similar way to how it would flow in the back end of system, where it starts off as a series of inputs and then it becomes a series of calculations, and then it becomes a long form set of data, and that set of data is the one that gets copied into every single output sheet, so that you know every single time you're creating output using some ifs that you are getting the right data. There's no find this cell because you might be pointing at the wrong cell and someone's done something, or a VLOOKUP where someone's added an extra column in. It was very much kind of organizing that data. Bearing in mind I'm not a coder, it was pretty much a big adding up machine, but it was all I had available to me at the time, and it did the same thing. It just took the inputs, it gave a bit of stability, and it spat out an output which was a data field which you could then get all of your kind of answers from. So I'm very much a fan of, I want to get to a point where we have a robust setup, but you can't assume the system is the solution to the process. They are two separate things that need to be looked at, and they both bring value. So yes, you can absolutely use Excel and use Sheets to help design it, and then you look at the system separately. but you need to do both parts.
I agree. I mean, I've been personally even implementing Anaplan for the last 6-7 years. And I can tell you all the planning of my model upgrades has been done in Excel. And I put my hand up and I say, first thing I sit down with the customer and I say, show me in Excel what you would do. How would you do it? What is your step 1? What is your step 2? What is your step 3? And then take it into Anaplan and say, okay, now you can do this in Anaplan and you can do this more and blah, blah, blah. And then they start to like it. But the first step is always open a blank Excel book, chuck it a bunch of stuff in there and say, okay, what are your thoughts on this one? Does this work for you? Because that's the best way to go. Again, as what both of you have said, right? It's a good brainstorming, initial idea developing activity. As long as you don't formalize it, you're fine. If you formalize it, then you have a problem. And because even in your previous job, what example you gave, Megan, right? It's you put a data structure behind it. That's the problem. I've had people where a list of POs, the purchase order, where the column in which they're supposed to be purchase orders, in there they've written comments, they've written names, they've written vendor name. Because Excel doesn't stop you, right? Excel lets you do what the hell you want to in it. That is the advantage of the flexibility, but the disadvantage as well. There is no data hygiene, data quality, no discipline. It's a wild west out there. I think we're really running over time. So very, very quickly, right? Quick fire. First, Megan, where do you think is the future of FP&A in the next 3 to 5 years? You're not allowed to say AI. So one line. Future of FP&A in 3 to 5 years.
My summary would be data-driven insights driving strategic influence.
Alwyn.
Embedded in the business. So less finance people and more business teams.
One thing that most FP&A functions need help with today and to become better strategic finance business partners. Megan.
Thinking business first. So changing the mindset of the types of conversations you're having. Again, that curiosity piece is important.
Perfect. Alwyn.
Commercial insight. What's really driving the business, not just the numbers.
If somebody is looking to get into FP&A or is starting just recently into FP&A, I think your first 6 months in FP&A, right? What is the one skill or certification you think they should have for them to become successful in FP&A? Again, Megan first.
So I'm going to slightly cheat and go for 3 because I think we should rename FP&A to Feelings, People and Art. Because it's not the traditional finance stuff that I'm looking for. It's, do you have gut feels on stuff? Do you have the people skills? And can you work outside of the box?
I love that. I want a snippet on that one. FP&A is feelings, people, and art. You heard it first on FP&A Unboxed. Not heard that one before. I am going to steal that one. Sorry, Megan, I'm going to steal that one.
I definitely can't match that one, but I think the thing that you really need to work on is understand the business and understand the people you're partnering with. So it's not about certification, right? Certificate, that's in the past, doesn't really say very much. You've got to understand the business and the people you're dealing with. And then you'll be able to build the relationships that you need to.
Any closing thoughts? Megan first. Always sorry, Alwyn, ladies first, yeah?
I think just for me, I like to think that FP&A is the more creative and slightly cooler side of finance. It's not for everyone, but if you look at finance and think, oh, I don't want to be someone that does the slightly boring kind of monotonous elements of it, and then that puts you off, there is another side to it. There's a side that is very much about the business and about really getting involved with influencing strategy, but it also has that data side for those who like logic or something stable as a kind of a base. So I think for me that's super important, and just go and try it. If it's not for you, there's plenty more options, but dip your toe in the water, have a go. If you get excited by some of that stuff, FP&A is the way to go.
I like the way you say, right? FP&A is the cool side of finance. That's what I thought like 15 years back when I started FP&A. This is cool side of finance. I enjoy this a lot more than my month-end activity. Alwyn, any closing thoughts? Did you enjoy the conversation today?
It's interesting to hear different perspectives, right? And would I agree with everything that Megan said? Well, mostly I do. But it's good to get the different sort of views. I think the thing I'd remind people is it's a partnership first and foremost with the people that you are supporting in the business. But even like head of FP&A, CFO, right? You both have different contexts. You both bring different things to the party, and it's the summation of those two together that enables people to drive real insight and decision making in the business. So if you take anything away from today's episode. It's FP&A is about partnership. I won't say it quite articulately as Megan, but if you don't get that right, then the rest won't do you a whole heap of good.
Thank you both for your time. I really, really appreciate your time today. And best of luck, Megan, with the adventure you've got coming very soon.